I would say it's impossible to build a really successful company without having super good people around you.
This podcast is brought to you by Fredrik Herstad and powered by Unlisted, the leading cap table management platform in the Nordics. Produced by Amplitude Ventures, your partners in early stage music tech.
Hi, and welcome to the new episode of the Venture Capital Unlocked podcast. This time we have Arve Fresvik with us, managing partner and co-founder of Momentum. Welcome, Arve.
Thank you, Fredrik. Great to be here.
Great to have you.
Thank you.
So, to start off with, please tell me a little bit about your background and your way into venture capital.
Yeah. No, I mean, deep down, I guess I graduated from business school, so master in finance, but done quite a lot of stuff since then. I've been in a couple consultancies in the early days after graduation, and also within a couple of corporates. So I guess in 2013, we started the company Momentum Partners at that time. We tried to call it only Momentum. That's what we aim to create for the company is we invest in. And basically started off as a small corporate finance boutique, and then entered into to venture after that.
Great. And then you don't invest in everything. Like you're particular in what you invest in, and sustainability is a keyword for you guys. Can you elaborate on why sustainability? How did you end up there?
Yeah. No, I think if you ask anybody or anyone on the team, I think we all accept that sort of climate change is sort of created by each and every one of us. So that's one thing. I think also when we started out, we basically were generalists at what we did. But in time, I've also been in oil and gas, and as such, following the effects and impacts of that, we wanted to be part of a solution, basically. So that's what sort of drove us into sustainability.
Yeah, good. For the listeners that doesn't know Momentum yet, what is your elevator pitch? How would you pitch Momentum to new founders?
Yeah, no, we want to be the sort of preferred sort of sparring partner to the founding team, and also co-investors, basically. So we're quite active in our involvement with our companies, and we're also sort of quite clear at what we do. So typically, we invest initially about €1 million. We try to sort of build a portfolio. In this sort of the latest fund, we have about 20, maybe even 25 companies. So we're going to build a sort of larger community around the companies as such. So we're there both with sort of financing and capital, but also sort of the active sparring partner along the way. So we typically invest in the seed stage, and follow on with additional capital in typical Series B, and also sometimes in Series B. But then again, sort of the rounds are bigger, and we as sort of an investor becomes less relevant. But we really try to stay on a sort of a relevant discussion partner for our companies along the way.
Yeah. I was looking at your website. I love your slogan. Great ambitions become reality when you add momentum.
Yeah. And I think that's how we see our role. We look for sort of the excellent teams out there, and we are guests at their house, right? So in some cases, we see that we spend quite a lot of time with the companies, and in other cases, and maybe even the best cases, we're there when they need us. But we're not there to take over the business. We take minority shares. We try to sort of point in some directions, be there when challenges and opportunities arise. And that's sort of our role, to play them even better than they are before.
Yeah. But you mentioned seed stage. So before Series A, usually your first ticket. So if a company comes to Series A and do a Series A round, would that be too late for you, or would you also enter into that stage?
Yeah. There are no rules without exceptions, right? No, so we've been quite conscious about sort of building our portfolio model and sort of our strategy as such. But in our case as well, there are no rules without an exception. So if we see that sort of rare opportunity, we don't deviate, but we can then sort of stretch a bit on that mandate. And it also goes the other way. If we sort of meet that fantastic group of founders that's going to sort of solve a big problem, and they're at the pre-seed stage, we definitely would also love to look at that. And we have, as long as we see sort of that perfect combination of a fantastic team and a great potential, we are able to go even earlier. So we've done that, and we probably will again. But then again, we have a strategy, try to sort of stick to that. But if that rare opportunity comes along, we're there to grab it.
Yeah. So what are you? So you're going in early stage, really. So what are the typical traits that you're looking for, or are there any things that you're looking for in particular, or like do you go in open-minded into the different deals?
Yeah, I think we're always open-minded. That's one thing. But the key things that we look for would be first and foremost the team. We need to sort of see that the team we have in front of us, they know what they're talking about. They're passionate about the problem they're trying to solve, and that they combined have sort of the competence and capabilities to sort of solve it. And I think it will become a cliche, obviously, that team is the most important thing, but it is. I think up until now, we started sort of investing in early stage back in 2015. So about 10 years in the venture game now. And what my experience is if you hit the wall, it is because of the team. And for all the successes that we've been part of, it's all because of the team. So that's first and foremost, the thing that we're looking for. That said, when we sort of pass that hurdle, obviously this is someone we believe in. We look at sort of the potential of the case. Looking at the market, that's not the most important thing, because if it's sort of disruptive enough, we believe that you will find sort of market potential along the way. But I mean, you need to see that the problem is big enough for sort of the economics to fly. That's also important. But I would say team, potential, and that you have sort of a concept, technology, product at the end of the day that we believe can solve that. And I think below that there are many aspects we would like to look into as well. But most importantly, it will be that. And again, as sort of impact investors that we are, we also need to see that we actually have an impact, either through reducing greenhouse gas emissions, or and have a sort of any other positive impact on the environment. That's super important. But that's sort of the climate mitigation part of it. We also look into, we reach a point now where we all see the headlines around us. Natural disasters in all shapes and forms currently. So we also look at cases that can actually that take in the fact that we're already there, and try to sort of adapt to the new world order that we see out there.
So how like you mentioned that you looked at carbon emissions and such. So when you look at an investment and to see if it fits your criteria for being sustainable, like, do you have any methods of calculating this? Like, do you do that internally, or do the portfolio companies do that, or like how strict is to fit that specific criteria?
No, that is a good question. And oftentimes it's actually quite or always quite easy to sort of figure out and then identify what is it, what's the impact. The harder part would be to sort of measure it, and not only measure it, but in a way that won't sort of soak the teams in sort of reporting, etc. So we actually, when we set up our third fund, the latest fund, we actually told our investors that we would like to have about 30% of our carried interest sort of linked to impact targets. So what we do before we invest is that we discuss with the teams, okay, what could be a sort of a reasonable KPI. We all, and quite soon you will, in discussion with the teams, they know what they here to do. So identifying what it could be, that's not an issue. But then, okay, how can we sort of measure this in an easy way? And that's oftentimes the difficult part. We try to do that. I think the two investments that we already did in the latest fund, we haven't yet fully decided how to do this, because we need to see how it goes, what's the realistic target, etc. But I think the important thing here is to figure out what is sort of a good measure of here. But you also need to measure it, right? So there is some flexibility around it, but that's how we do it, at least.
Yeah. So it's not enough to just have one of these UN sustainability logos on your slide. It's it has to go deeper than that.
Yeah, I think so, because we mean business, and the founders that we meet and that we invested, they really mean business. And it's also my firm belief that the investors backing us, they also believe in this, right? So we need to make at least some effort to get there.
Yeah, makes sense. So can you, and I guess since we're talking about this, there's probably some sectors within that you're again looking more for than others. Could you elaborate on that?
Yeah, absolutely. Now, in a little bit to where we come from. I mean, we're based out of Norway. But then again, we invest in all 27 countries, probably still mostly focused on Norway. I have to say that's sort of our home turf, etc. But I think the strategy and the focus that we have today, it comes from several sort of layers of experience, probably some coincidence as well. But I think I would like to sum it up. It's sort of the combined experience from the 4 team members that we have. That's one thing. I'll come back to what that might be. It's about where we sort of come from. Is Norway? What kind of industries are we sort of ahead on the curve on what are the largest sort of industries we have in Norway. And if you sort of combine that with the biggest challenges that Europe and, the world for that matter, currently are facing, and then we're talking obviously climate, but you also have food production as a core thing, energy, and I think especially for Europe, the challenges associated with sort of productivity. So you have on the macro scene, obviously the challenges and the way we look at it, opportunities that we have in Europe today, combined with our experience. We're from Norway, and some of the biggest sort of industries and export industries that we have are to a large extent linked to the oceans. We have a lot of capabilities built on sort of centuries, if not even more, harvesting the oceans one way or the other. We've become pretty well evolved when it comes to sort of electricity, power, and obviously energy in a wider sense. And I think also, lastly, what is really sort of fascinating and interesting in Norway is that we have an abundance of data in many of sort of our core industries. So to sum all of that up, I think we have a competitive edge in Norway if you look at maybe aquaculture, but then that's food production and sustainable food production. So that would be one of our areas. We also see sort of energy production, and then not looking at sort of the fossil part of it, but then electricity generation. That's interesting. And in addition to that, we're firm believers that everything that can be electrified will be that. So everything that is happening around power generation, and then electrification of the society at large, that's something we look at. And then sort of the last part would be sort of decarbonizing industrial processes. We have a lot of industry in Norway, and looking at sort of the second bulk talked about, there are a lot of sort of synergies in terms of what kind of competence clusters are we looking into, what kind of network are we looking into, etc. So I think, and this is obviously something that's been not happening overnight, sort of a strategy workshop with the team. So I think this is something that we've been developing, fine-tuning over the last sort of 10 years. And also, I think with all of us, more or less sort of experience within all of these sectors as well. So it's, but is it? Yeah, I think one thing that is sort of common, across the entire team of Momentum is that we are, previously we worked with some consultancies, all of us been paid for sort of laying out strategies for small and big companies around the world, and we actually spent quite a lot of time doing it. So being focused, we tell all our companies that is one of the most important things that you do. Stay focused at what you're doing, even though it's a sort of a niche market you're looking into. But we also try to be there, and finding then the balance, and not sort of losing any opportunities on the way, not sort of limiting the potential influx of new opportunities, right? So, but that's also why we look beyond Norway. So, and that's super important. We are a small country, way up north, and it would be a miracle if we sort of found the best solutions to every problem on this planet, right?
Yeah.
Mm.
So you mentioned team and Norway. So how big is your team, and where's your kind of headquarter?
Yeah. Now we're a team of 4, quite seasoned team, 4 partners, and we have a model where we have 100% equal sort of ownership between the partners, even though some are a bit younger than others. I think that's the way to go. And then we have sort of investment director as well. Headquartered out of Bergen. That means we have our families here and an office, but we try to sort of stay on the road as much as possible, because that's where the action happens, right? I think if you look at that, I think it's and in all transparency, with a headquarter on sort of the western coast of Norway, where, you know, looking at Norway, at least, you have probably 2/3 of the opportunities happening in the Oslo area. But we want to make sure that at least whatever happens on the coast of Norway, we're there. We've heard of it. We've had the dialogue since its inception. That's important. And we also see the importance of being close to sort of the industry clusters. Take aquaculture, for instance, and other ocean industries. Many of the sort of the biggest players of the world are, you know, headquartered in Bergen. But we do see that we need to stay on the road, or unfortunately, with the impact it has in the air, to make sure that we also see all the other exciting cases that in Norway and the rest of Europe. So that's yeah.
Good. So I was wondering, earlier you said that typically if first ticket that you do is around 10 million or 1 million euros,
Yeah.
or
1 million euro, 10, or more like 12.
yeah, I guess that's well now. Yeah, it changes quite a bit, but yeah, 1 million euro is probably easier to go by euro. So any thoughts around like equity, convertible, slip safe? Like, do you have a fixed? Does it have to be equity, or do you also do other types of deals?
No, I think in my sort of 10 years of venture investing, I think yeah, I've been doing everything you can find in the corporate finance toolbox. We're super flexible on that. And again, as we have a strategy, what kind of cases and teams we're looking for. We also, and we're quite conscious about what kind of ownership we want to sort of build over time. But we have a long-term perspective. If it's right and sort of wanted from the founders, slip is perfectly all right for us. But we need to see that, at least in some time, we tend to target 10%, maybe a little more of ownership, at least after some time in the company. And again, it's what we can't do is just sort of we can't grant any loans to any company. That's a sort of a limitation of our model. So at some point, it needs to be converted into equity. But it's super flexible, and I think in discussions with co-investors and founders, we tend to find a solution on that, what kind of sort of instrument to use. That's never the most important part of any discussions, I would say.
Okay, good. So in the rise of AI, has that changed anything for you? Like, have you changed your mandate, the way you look at things,
Mm.
or how does AI fit with sustainability? Any thoughts around that?
Yeah, absolutely. No, it's yeah. I think it's something obviously that everyone is scratching their head how to sort of approach it, what kind of tools to use, etc. And I think for us, it has actually changed quite a lot about our business, and I think first and foremost internally how we work. We use AI software tools, for many parts of our business, not least, screening new opportunities, deal flow, and the way we work with deal flow, much more sort of effectively now than even before. I think one thing is sort of the overview you have and get of sort of the deal flow at any time. I mean, I don't know how many cases we get a year, or I know that exactly if I looked into our sort of AI software tool. But let's say about 700-800 companies. And it's important to sort of have sort of a constant overview and control of that deal flow. Where in the sort of the pipeline is it? We had the first meeting. What was the last touch point? And we really want to sort of make sure that we sort of give all the cases the attention it deserves. Really important. And oftentimes we also follow cases over time, right? So maybe 3 years ago it wasn't the right timing, but it is now. So what was the last touch point? What was sort of the most interesting and exciting thing that we discussed at that point, right? So I think deal flow wise, super interesting, but it also affected the way we look at opportunities in general. It's affected our strategy. We've always been sort of an investor, investing both in hardware and software. And hardware it is tougher. You have physical things. Once you ship it to the client and something happens, then you need to take it back. I mean, costs have a tendency to run, right? So, but I think the hardware part now is even more important to us, actually, because it's AI resilient to at least a larger extent than pure software, right? And we also see that we are getting more and more focused on if you have pure software companies now, then you need to have something more to sort of create that moat, because you could have someone using an AI agent the other or the next day, actually, not necessarily sort of on par with what you've spent many years building, but close, right? So having that sort of hardware component can actually be part of a moat, having really deep domain knowledge. And I'm not talking about the technical side now, but the dynamics of the industry as such, super important. So how we view cases and how attractive those cases are is always about sort of building that unique thing, building a moat around it that can sort of defend you from competitors, etc. That is something that has sort of impacted our view on sort of new opportunities. That said, the impact from AI when it comes to doing things more efficient, that's one thing, but then actually doing things that you didn't even imagine a couple of years back was possible. So we see that a lot of new opportunities coming from this as well. So I think at least for for us, the only way to sort of look at this is that you need to sort of really jump into it and see the opportunities around it, and they are massive. What is an issue? And that's more sort of on the overall dynamics of sort of the venture industry as such, is that we see that a very large part of global venture funding now falls into to AI. And that is in a combination where you have a crunch in other parts of the market, right? So if you look at sort of some funding numbers now, I think we are way behind sort of the peak levels of 2020, 2021. But we also see that we stay at that relatively low level right now. I mean, we've done so. I think if you look at sort of last quarter, Q2, and funding levels, we're at this sort of same spot that on average we've been the last 10 quarters. So it's super stable at relatively low levels, and we're worse off in Norway, just to have said that. But about 50% of global funding within venture went to AI companies now. So you see that the company or the market is really selective currently. That could hurt other opportunities. I'm not too afraid of these hypes. So I'm not saying that AI is a hype, but in a combination where you see that there's a lot of capital flowing into AI, and the rest of the market is at a low level, that could be an issue. But I think for us it also brings opportunities, right? So, global funding into AI is at a really high level currently. And you see sort of, just to sort of add that as a comment as well, you see the funding levels into AI in the US compared to Europe. I think we're looking at 9x, something like that. It's just amazing. So if you're not certain who's gonna sort of win that race, I mean, the US, they're way ahead of the rest of the world. Then again, I don't know how much of what's happening in especially China that we actually know of. Right, there have been quite a few surprises coming out of China the last 12 months, right? But it's there's no doubt that Europe is lagging behind quite significantly.
100%. And you're kind of entering into a very interesting macrodynamic conversation here, which I would love to have as well, because I totally think you're right here. So given that we just said, like, it's been very stable the last quarters in terms of the capital employed and such, but significantly less than we, the high back in 2020, 2021. But it does something with the market over time. When you're used to something, there's more businesses starting up and they need more capital. And so the market dynamics has changed in the venture space. So from like in companies talk about less capital being available, you hear like companies postponing fundraisers, you see less startups starting. What's your perspective on how do you view that from an investor perspective?
No, it's really exciting times. And what you didn't mention is also that sort of VCs also see have tough times raising funds, right? We've been,
Yep.
I mean, talking to our friends both in Norway and abroad. It's really tough times also for VCs, and the sort of the selective market you see for companies and startups and scale-ups. You also have that for VCs. And just to add to that, I think CVC funding, corporate venture, that is, We're talking 7-year low. Um,
I saw
yeah.
that.
So, but then the question is, it is what it is. So then you can either sort of do the very best you can with that as sort of the backdrop, or you could look for light in the tunnel, right? Just to sort of start with a ladder, do we see any light in that tunnel? I don't see that in the very short term. Obviously, we talked about the sort of macro indicators, and in this, obviously, interest rates, inflation, all of that, it matters. But still, I think we have a couple of years to go before we see that happening. Then the question is, when you have a very selective market as you have today, I mean, stable funding level, but the number of deals, they keep going down. So that's an issue, very selective. And what do I mean by that? It means that if you have the right metrics, the team is fantastic, the potential of the business is great, and the big problem and all of this, you will get the funding. Actually, I don't see that there are sort of big differences between sort of the deal dynamics of those sort of competitive, or the good deals that get funding today, compared to even the sort of peak or heydays of 2020, 2021, and somewhat into 22. So you still have competitive rounds out there for the right companies, the quality companies out there. So that's one thing. The problem is the companies that have metrics a bit below par, and you don't have to be far away from par, but you're below par, and sort of you're labeled as that. Then you have a really hard time getting funding at all. And this is obviously quite general, but we do see some of our sectors, the dynamic is quite differently. One of our sort of key sectors that we look into would be aquaculture, where you have a lot of temperature these days. You've had quite a lot of, at least for sort of the Norwegian setting, interesting M&A deals going on. You've had a number of sort of larger rounds, one of which we actually had. We had one of our portfolio companies, Remora Robotics. We closed the Series B, not before, but actually the first week of my vacation in July. So that was a busy week. Finding down. Actually closed 3 transactions the first week of my vacation, so not a very happy wife. Yeah, maybe I should. No, so also sort of sector-wise, so aquaculture, a lot of things happening. You have defense tech that's definitely on the rise for obvious reasons. So yeah, but it is a difficult market, and I think the only thing that really works is you need to do even more of what seemed to work sort of last year. That also goes for VCs. We've seen, if you look at the sort of Norwegian sort of VC scene as well, there is quite a lot of dynamic happening there as well. And I'm super happy to see that our good friends. I mean, we had the first close of our last fund in January. We saw that Skagerrak Skagerrak Capital just announced first close. The same size as we did. Alliance Ventures also, which is sort of even more pan-Nordic than we are. But so happy to see that they succeed in doing this. But I think Norway, we do have an even more sort of critical issue in channeling more capital into the venture space than the rest of the Nordic. We're sort of lagging the likes of our Nordic neighbors, or Scandinavian neighbor, plus Finland, I would say. But I think sort of the capital crunch that we currently see in Norway is worse than our Nordic neighbors are experiencing currently, even though it's a global phenomenon. No doubt. But we have some obviously special, let's call them, challenges in Norway.
Yeah. So let's kind of go back into the deals or kind of the practicality. So when what's the best way a founder or company can or should reach out to you guys?
I don't think there is any way better than the other. I think all ways into momentum will be received, looked at thoroughly. I think I can guarantee that. But what we do see is that if I mean we after some time in this industry, we're so fortunate to have many friends. And all the friends we have, we trust. So if you sort of get a warm introduction, let's say we had one company that I met earlier today that was introduced from Voima Ventures in Finland, and that always helps. But then again, a cold outreach, no problem. And the way we work and the way it should work is that even though you don't sort of nail 100% our sort of investment focus, we look at it as sort of our duty to make sure that then these founders or this company that find their way to a more relevant investor, right? So no, there is no. But then again, if you have a sort of a warm introduction from somebody that we trust, then it's not easy to know whether we trust or do not trust people. But that always helps.
Yeah. Previously, we talked about the things that you look for an investment. Flip side of that, are there any typically red flags that make you want to stay away from the company? Or
Yeah. Yeah. Not necessarily red flags. I think you can, yeah, even though if you make a sort of a bad first impression, there is always a second, third chance with us. But I guess things that we at least need to work around if we find it with a company or an opportunity is that if there is a single founder or one founder that she or he has sort of a big team, but she or he owns most of the company, that could be actually, it's not a showstopper, but it is a turnoff because I think the first sort of businesses that I started myself, I did on my own. I got tired of it. That was because it was a bit boring. It was real estate, so it wasn't that cool. But the other part is that I did it on my own. So we look for a team and a well-functioning team. I sort of addressed it a little bit earlier. But if you're a sort of single founder, my question is, why don't you see the value in sort of bringing in people that can complement you? Do you have issues in sort of attracting team members? That could be, or are you outright greedy? So it's because I mean building a successful not necessarily global but big international company
will require people, and probably the best people you've ever worked with as a founder. And if you don't have anyone to sort of share that passion, to sort of that shoulder to cry on, and that or those people to sort of celebrate all the small and sometimes the big victories on the way, that's not good. So you need that because there are so many issues that you have to sort of get around on that journey. That it's I would say it's impossible to build a really successful company without having super good people around you. So that sort of team dynamic is super important. So that will be a turn off. And we'll also see broken cap tables, not necessarily a showstopper, but and by broken cap tables I mean if you see that there are large passive owners that historically it might have been important to the company, but it no longer. And you're just sitting there waiting for the company to cash out. That's not a good thing. And then it's sort of a smaller portion to the founding and the team driving the boat, right? It's that's also an issue, but it could be fixed. And if the team is just super good, the opportunity is large enough. There are ways around this, but then again, you need to do some financial engineering, right? Yeah. So, but that's, I mean, talk about just finding sort of the chemistry with the team and the founders. That's important. But I think for us, if you look at the sort of the teams that we work with, there are, the personalities, the people there are, so plentiful. I mean, you have them in all, shapes, ways, and forms out there, and I'm equally intrigued by the sort of the quiet nerd that during a dinner just had to tell me about sort of the new way that NASA's flying around the moon, or and sort of the super outgoing chief commercial just had some experience with his kids. I mean, it's so you find that chemistry along I think all the dimensions you can imagine, right? But that is important, that you find some sort of frequency that you can communicate on, because that is needed. Because when you're there to tackle a crisis, or you're going to take that opportunity, we need to understand how to sort of trigger sort of a motivation, or sort of how to guide them into at least what we think is important, or to the extent that they listen to what we say. Hopefully they do. But that's how it is. But that's also important. And if there is nothing, and you have a founder and a team that you see is difficult to coach. I mean, a lack of, I mean, they know it all, and will not, even though there is strong evidence to the contrary, that they should go to the left rather than to the right. That is not necessarily a good thing. So being coachable, open to others' views, I think that is, in general in life, that's quite important. But that's also sort of a trait that we like people that listen, not only talk. even though I'm from Bergen, Norway.
You said it. So okay, so like back to you then. So after investing for quite a while, you've seen quite a lot. What are the biggest lessons that you've learned during your time as an investor?
If you need to be too involved, I think you already lost. I think what we have experienced is that the sort of the companies that are most successful, or at least there could be many reasons for not being successful. It could be sort of external, elements as well. But the ones that are coachable, take a sort of a message, can change their mind, everything, listen, but basically they run the show themselves. I mean, back to the team. It could be that every now and then we sort of set up a SWAT team. We have, some technical issues. We need to solve it, during the next 3 weeks. That could be something. But the ones that sort of drive the bus themselves, that's important. Because if you have to sort of, and for us, it's the last resort to sort of step in and do something, change the team or whatever. I mean, but too much handholding, it's a symptom that something doesn't work. So at least that's our sort of approach to the teams. We're here to help. And it is oftentimes a 24/7 hotline, right? But we're here to sort of guide, not necessarily do, right? And that's not because we don't want to do it. I think that the most interesting part of my job is actually working shoulder by shoulder with the teams. But I think in general, success comes with sort of the teams that sort of owns and drives processes themselves. So and I see that it's super risky when you need to sort of change, and it's sort of board initiated. So change the CEO or yeah. So that's something. And I think the other lesson, important lesson, is that when you make a decision, you always make it too late. And the bigger and more important and critical the decision, you're even more late. So and back to sort of that of sort of changing critical team members, etc. That is also something that we see when it is obvious, and often sort of initiated from sort of the other members of the team, but you tend to sort of delay those critical decisions. So yeah, but I mean, and we had external factors coming in, regulations coming in, that sort of really impacted the business in a negative way. So you never know. But nothing, is a straight line from A to B in this world, and it's hard work. That's just sort of I think that's the most basic success formula in the business, and I deeply respect it, especially the founders, but I think anyone involved in sort of building the new companies, the new ecosystems, and sort of the new future out there. Either you're sort of a founder, investor, or in any way sort of trying to help out, creating new opportunities out there, because we need it, especially Norway.
Well said.
Mm.
So before we round up, and you've been touching upon it a little bit, but if or to all the founders out there, what would be your top advice to the founders or wannabe founders wanting to start a new company and build it from scratch?
Mm. Yeah, and I mean, I'm a VC, but I you know, I really mean this. I think first and foremost, I mean, at all times, make sure that what you're doing and what you're focused on is building a solid business. Don't do it to sort of push up the valuation of the company, or some super hot VC in Silicon Valley wants to look at these companies. And if you're not an AI company, then don't call yourself an AI company. So sort of build a solid business the way you want it to be. So I think that's super important. Don't make any sort of shortcuts. And if you do, make sure that you're super honest and transparent around it. And the other, that is sort of the business. But for a founder, I mean, be genuine. I mean, honest, open, and about what you're doing, why you're doing it, etc. Because it's so easy to sort of see the difference between someone that just want to be an entrepreneur from someone who is really, really passionate about what you're building. And that's yeah. So and we want to sort of really, really understand and get to know the person behind. What drives you? Why are you doing this? What led you into this? Why is it you and the two others? How did you guys get together? How do you complement each other? And when the going gets tough, what is it that sort of keeps you energized and at all standing tall? So that's because it's not easy. It's super fun. It's challenging. You learn something all the time, but it's not easy, and that's why it's so important to be honest about who you are and why. The whys. That's important.
Yeah.
Mm.
And I guess the why is maybe something to do with the grit and passion that you're in it for the long term.
Yeah, I think so.
Good. Okay, so build a robust business, be honest, genuine, get a good team, maybe some co-founders, and then be passionate about it.
Mm.
Yeah,
Just as easy as that.
just as easy. Great. Okay, thanks, Arve. We're kind of heading up to an hour now, so I think it's time to round off. Great to have you on the podcast to learn more about Momentum, your perspectives, and also for your advice to the founders out there. So wish you best of luck going forward, and thanks for now.
Thank you so much. Pleasure.
Take care.
Take care.